Welcome. Good to have you with us. Where are you on whether there will be a recession or not? Are you there with Ed Hyman or not?
I am, actually, and I think the credit stresses that we've already seen are additional tightening in the pipeline, and there really is this sort of unknown unknowns out there of how much tightening it will be. And I actually would prefer the Fed take a pause. I wish they had taken a pregnant pause at the last meeting because we just don't know how much credit tightening is in the pipeline. But I think that's very important because that's going to really delineate who wants to hike rates one more time at the May meeting and who does not. And I think we're likely to see another quarter-point hike given how high inflation still is and where it is relative to expectations. It's not come down as rapidly as the Fed would like, and they're still going off the sort of assumption that it will remain more sticky. That said, there are many people on the Fed that are now sort of breaking and saying, we really need to take in these financial conditions. I was at the Economic Club yesterday with Austin Goolsbee, and he was talking about the need to assess these conditions and sort of get some perspective on how much tightening is in the pipeline and how much heavy lifting that credit tightening will do for the Fed.
Steve, did this morning's numbers change in any way the market's anticipation of a rate hike in May? And what do you think not only they will do, but what they might say in May?
I don't think it really changed very much. You did have the headline coming down a little bit more than expected, but it's the Fed and the Fed chair have pointed us to the core, and the core didn't show as much improvement. But, Tyler, I think we should maybe I'd like to talk about this issue of the Fed hiking while the staff is forecasting a mild recession. I don't know if it's the same thing as a president overruling his Joint Chiefs of Staff about going to war or whatever, or something like that. But the staff said mild recession as a result of these banking stresses, and the Fed went ahead and hiked anyway. It sounds to me like Diane would have sided with the staff. I know a lot of other folks would have. So it's an interesting development here that the Fed decided that a mild recession as forecast by the staff was, I guess, okay relative to the need to fight inflation. And so they went up a quarter anyway, despite the forecast of recession from the staff. I think that's a pretty important and significant development.
I'm glad you flagged it, Steve, especially because Mary Daly also this afternoon said she expects we'll avoid a recession, so clearly weighing in with her own point of view. Diane, unpack this for us a little bit. So these are the Fed minutes, but we also have this Fed staff projection that Steve's talking about of a mild recession later this year. What are these two separate things, and what is the typical kind of interplay between them?
Well, there's no question the staff briefing is really important, but I think also we have to sort of go back up and remember what the Fed released for their forecasts in the last meeting, in March meeting, and that was for 0.4% growth, was essentially a recession in 2023. So that the mild recession scenario is one that many within the Fed, with the increases in unemployment, although not huge by any measure, and but enough for NBER to declare it a recession, the Fed already had that baked into many of their expectations and felt that was necessary. They don't always say the quiet part out loud. I think the closest they came was, the 8-minute, 34-second speech by Jay Powell at Jackson Hole, but also when Jay Powell a little over a year ago first used the word soft-ish instead of soft when referring to the landing. So I think from the Fed's perspective, they expected, many of them thought they'd need a mild recession, which is why we've been betting on a recession, hard to time. But the bottom line is this has been their goal. And I think now the question is, can they actually calibrate it? And this is where the division comes from. The doves are voting more in these meetings this year. The doves, many of them are coming back and saying, listen, we're willing to take a recession, but, we've got this additional tightening. Do we need to go that far this fast? And that's where the break is going to be. So I think you could get a rate hike with dissents. And I think that's going to be a very mixed message to financial markets, but you're already starting to hear it in the communications from those that are going to be voting at the next meeting.